We're about halfway through with 2026, and the Fort Lauderdale luxury market has done something that neither buyers nor sellers expected. It's quietly strengthened where most of the country was talking about a correction. In this video, we're going over where the Fort Lauderdale luxury market stands right now, headed into the second half of 2026. What the data is actually showing, what I expect to happen between now and December, and what that means if you are a buyer or seller trying to time a decision in the next 6 months. My name is Steve McAleer. I've been selling real estate in Fort Lauderdale for 20 years. I've completed over 600 transactions in this market, and I work with The Agency, one of the premier luxury brokerages in the country. I want to be clear upfront about what this video is and what it isn't. This is not a promotional piece telling you the market is great and you should buy now. This is my honest read of the current data, what it says, where I think it's heading, and where the real risk and opportunity sit for the remainder of the year. For starters, let's talk about where the market actually is right now. Single-family home inventory in Broward County is currently sitting at approximately a 5-month supply, which is technically below the 6 months that defines a balanced market. That means we are still in mild seller's market territory for single-family homes in the county overall. And in high-demand areas, we are once again seeing multiple offers near or slightly above asking price. Not at peak market intensity, but competitive. Fort Lauderdale waterfront single-family homes are selling at approximately 94% of their original list price on average, a normal equilibrium ratio that signals neither a distressed market nor an overheated one. Inventory levels in Fort Lauderdale waterfront are close to normal at around 9 months of supply, with sales volume relatively flat. The condo market is a different picture. Fort Lauderdale currently has approximately 10,000 condo units across its main buildings, with an estimated 2,500 units expected to be delivered for new developments over the coming years, which is creating meaningful supply pressure specifically in the condo segment. Condo inventory in the broader Miami metro sits at approximately 13 months of supply, which is elevated and reflects the legislative headwinds the condo market is still working through. The division I've been describing all year is confirmed in the data. Single-family waterfront is holding firm, and the condo market, particularly older buildings still working through reserve and inspection requirements, is where the softness is concentrated. Next, let's talk about what the migration data is telling us. Broward County showed real traction through 2025. Sales rose, prices held, and the high end kept its footing because affluent buyers don't buy the same way everyone else does. They buy for scarcity, privacy, water access, and a lifestyle that feels inevitable once you've lived it. Buyers from the Northeast and Latin America continue to fuel market momentum, seeking waterfront investments and downtown luxury properties that offer both lifestyle appeal and strong wealth preservation potential. That is not a 2026 story. That is a decade-long structural migration that shows no signs of reversing. Cash transactions represent approximately 37% of total sales in this market, which means more than a third of buyers are not rate sensitive at all. That is the insulation that has kept Fort Lauderdale's luxury segment from experiencing the rate-driven demand destruction that has hit more mortgage-dependent markets hard. And real quickly, if you're researching Fort Lauderdale right now, I've put together a great resource for you. It's called the Fort Lauderdale Homebuyer Guide. Inside has information about neighborhoods and price point, what to buy, what to consider, and how to move here without second guessing yourself. There's no catch, it's totally free. You can download it using the link in the description. Now, let's talk about my predictions for the second half of 2026. For waterfront single family in the core neighborhoods like Las Olas Isles, Harbor Beach, Rio Vista, and Coral Ridge, I expect prices to hold or appreciate modestly through the year's end. Luxury and ultra-luxury segments are projected to continue outperforming, while entry-level homes see slower gains. The supply of well-positioned deep-water product is structurally constrained, and the buyer pool for it is cash-heavy and migration-driven. I do not see a price correction in this segment in 2026, absent a micro shock that is not currently visible in the data. For non-waterfront luxury above $1.5 million, I expect continued pressure on overpriced listings and further price reduction activity, but not a broad decline in renovated properties that are correctly priced to current current comparables. Sellers who have reset expectations are transacting. Sellers who have not are sitting. For the condo market, I expect the bifurcation to deepen through year's end. Newer condo buildings are creating opportunities, while older buildings facing assessments will continue to see extended selling times. The buildings that have clean structural reports and funded reserves are going to increasingly stand out as the market gets more educated on the legislation. Buildings that haven't resolved those issues fully are going to face continued pricing pressure. If the Fed makes additional rate cuts later in 2026, I expect more buyer activity, higher prices, and increased competition going into 2027. Rate relief will bring financed buyers off the sidelines and compress the window of negotiating leverage that exists right now. The buyers who are waiting for rate cuts to act may find that by the time the rate cuts materialize, the negotiating environment has tightened. Now, let's talk about what this means for buyers and sellers. For buyers, early 2026 offered negotiation room, particularly in condos and non-waterfront luxury, and that window still exists, but is narrowing. The waterfront neighborhoods I work in are not distressed. They are not offering 2021 pricing in 2026. But relative to what this market looked like 2 years ago, a prepared buyer with current data has meaningfully more leverage than they would have had then. That leverage is most real in the non-waterfront luxury segment and in well-run condo buildings where the legislation uncertainty has cooled buyer enthusiasm, even in buildings without real issues. For sellers, the market is rewarding accurate pricing and penalizing aspirational pricing more clearly than it has in years. Fort Lauderdale keeps attracting people who can choose anywhere, and those people keep choosing here. That demand is real, but is meeting a buyer pool that has done its homework and will not overpay relative to current comparables, regardless of what you paid at peak. My overall read for year-end 2026, this market finishes the year stronger than it started it, led by waterfront, single family, supported by continued migration demand, and complicated by the ongoing condo market bifurcation. Not a boom, not a correction. A market that rewards precision in pricing, in property selection, and in timing. And that wraps up this Fort Lauderdale luxury market prediction video. If you have any other questions or would love to work with me directly, all of my contact details are below.